Welcome, dear traders, it's me, Kate Stichin, and you are watching a recap of the Asian session on April 24. Trading in the Asian stock markets was rather lackadaisical on a Monday morning. Stock indexes showed a mixed dynamic. Investors prefer sitting on the sidelines ahead of the tech giants' earnings reports. Apart from that, several central banks will hold their meetings. What's more, optimism waned following stronger than expected US PMI data. Upbeat figures signaled that the Fed is likely to maintain its aggressive stance. The MSCI Asia Pacific Index dropped by 0.4%, while the Nikkei rose by 0.2%. China's blue chips fell by 0.4%. The central banks of Canada and Sweden will announce their key decisions this week. However, traders are mainly focused on the Bank of Japan meeting, as it will be the first meeting chaired by the new governor, Kazuo Ueda. Kazuo Ueda spoke in favor of a dovish stance on a Monday morning. Analysts do not expect the Bank of Japan to change its yield curve control policy in the near future, yet there are rumors that the central bank may conduct a review of monetary easing to assess its impact on the economy. In the Asian session, inflation data from Singapore was in the spotlight. Consumer prices climbed to 5% in March, which was slightly below forecast. The core inflation, which excludes private road transport and accommodation costs, jumped to 5% year-on-year in March, lower than the 5.5% rise seen in February and below the forecast reading of 5.1%. The MAS noted that the rate was driven by lower inflation for services, food, retail, and other goods. Headline inflation was up 5.5% year-on-year in March, compared with an expected increase of 5.6%. The central bank said that core inflation was expected to average 3.5% to 4.5%, and headline inflation was forecast to come in higher at 5.5% to 6.5% this year. The yen kicked off the week with a small rise due to expectations of a new rate hike by the Fed Reserve, and the Bank of Japan remains dovish, which is a negative for the national currency. The dollar-yen pair was rather volatile at the opening, but closer to the end of the session, and the price returned to Friday's level. It was trading at 134.25, or 0.08% higher amid the cautious market sentiment. Despite the fact that the Bank of Japan will hardly make any drastic changes, it might revise monetary policy settings in the long term. The Japanese Sankei newspaper said that the central bank may start the discussion of the long-term review of the monetary policy at the upcoming meeting. Speaking to reporters on April 10, Kazuo Ueda said that he will communicate closely with the government and guide monetary policy flexibly. In March, Bank of Japan Deputy Governor Shunichi Uchida pointed out that if the Bank of Japan decides to conduct a comprehensive review of its policy, it may take from 12 to 18 months, judging by the experience of the United States and the European central banks. Given that the Bank of Japan will hardly make any radical decisions this week, investors will largely focus on Kazuo Ueda's speech, so the yen may advance ahead of the meeting. While investors are reluctant to open new positions before the Bank of Japan meeting, The United States dollar is recovering. On a Monday morning, it resumed an upward movement, and during the Asian session, the US dollar index grew by 0.1%, trading at 101.70. It's likely to remain in the range of 101.60 and 101.90, and the US dollar has started the last trading week of April with a rapid growth as traders are looking forward to a series of the central bank's policy meetings. They could provide hints about how soon the monetary tightening cycle around the world could end. The Fed is projected to raise the key rate by another 25 basis points, yet traders are likely to be more interested in Jerome Powell's comments. While some economic data signals a slowdown in economic expansion, several sectors of the economy remain resilient. However, inflation remains stubbornly high as well. PMI data released on Friday showed that business activity in the United States and the Eurozone increased in April, which eased concerns about an impending recession in the leading economies. The services sector in both Europe and the United States is quite resilient. So far, there have been no signs that the ECB or the Fed could shift to a softer stance in the second half of the year. The Australian dollar started the week with a fall, but closer to the opening of the European session, it was able to slightly recoup losses. It dipped by 0.29% to 0.6674. By the end of the Asian session, it was trading at 0.6680 or 0.15% lower. In Australia, shares of mining companies decreased after the Chilean government tightened control over its lithium industry. Chile is home to one of the world's largest deposits of lithium, which is used to manufacture EV batteries. The Aussie failed to summit an upward movement due to a rise in the United States dollar and the fall in oil prices. Taking into account this week's economic calendar and the bullish outlook for the US dollar, the Aussie is likely to move in the channel of 0.6668 and 0.6690. The New Zealand dollar was trading around 0.6147 or 0.2% higher on Monday morning. After Friday's sharp decline, the Kiwi was trying to lick bonds. Its growth looked more like a correction. And the rate gap difference between the Fed and the Reserve Bank of New Zealand is growing, which is extremely bearish for the Kiwi. The majority of investors are betting on a 25 basis point rate hike by the Fed. At the same time, traders expect the Reserve Bank of New Zealand to take a pause in the tightening after an unexpected decline in inflation in the first quarter of 2023. So, the Kiwi dollar pair is likely to fluctuate in the range of 0.6122 and 0.6166. And that's all for now. Please leave your comments down below. Hit the subscribe button and keep close tabs on the latest market developments. And see you soon.